Today, I'm going to show you my favorite option strategy that can help you generate 61% return on invested capital in a month. So make sure you guys stick around till the end to see how you too can use this really simple strategy repeatedly and consistently to generate consistent income while using very little capital. Welcome to the channel. This is Credit Spread Investing, where I use my real life trades to demonstrate and show how you all too can use options to generate additional income safely and consistently. If you guys like the content, make sure you guys like and subscribe so that you can learn how to make selling options your own side hustle. Now, first the strategy, then the trade. The strategy isn't anything complicated. It is selling a 30 to 45 DTE credit spread that I enter using technical analysis and not delta. If you guys don't know what credit spreads are, make sure you guys head over to this video first. I'll link in the upper right hand corner somewhere, and then come back to this one. Right, so I'm going to use my real life trades to show you guys all why 30 to 45 DTE credit spreads are awesome. This month I sold a SPX call credit spread 46.10, 46.15. That expired around 30 days later on 8/31. Okay. I collected a total of $180 a spread. Collateral requirement was only $500 for this one spread, which means that my return on invested capital would be 36%, 18 divided by 50. My max loss is really only 320, 500 minus 180, but I'll show you guys later why that really doesn't matter, because I'll get out of these trades before my max losses hit anyways. I sold 4 of these, collected a total of $720. This expired out of the money on 8/30, so I actually realized the 720 as profit. Okay. And so as the market continued to move down, as you guys can see later on in this video, there was another opportunity for me to make even more income without having to risk more money. The way to do that is to sell a put credit spread, also on SPX, to make this into an iron condor. My put credit spread was at 43.50, 43.45. Also the same expiry on 8/31. I collected a total of $125 a spread, slightly less than the call credit spread, for the same $500 collateral. By itself, 25% ROI. I also sold 4, and it expired out of the money on 8/31, and I collected a total of $500 on this one spread, which means that on 8/31 I actually realized 500 plus 720 equals $1,220. Okay. If you guys don't know what iron condors are, make sure you guys check out this video here where I go in depth into what it is, but we'll talk about it briefly. So just look at one trade here, one iron condor, call credit spread plus the put credit spread. My total risk is still going to be $500 because the market can't be both above 46.15 and be below 43.45 at the same time, right? It either has to be above 1 or below 1, which means that max loss will still be $500. But my total credit collected per iron condor is going to be 180 plus 125, which is going to be $305. By taking $305 and risking only $500, when it expired on 8/31, my actual return on investment is going to be 61%. So in 1 month, you're able to make 61% by selling 2 credit spreads, but not increasing the total amount of money that you'll need to make this one trade. This is why credit spreads, especially 30 to 40 DTEs, it gives you, one, the opportunity to open up these iron condors really easily, as well as allow you to let theta decay out and collect a larger amount of premium in a relatively short amount of time. So this is why this is my actually go-to strategy in most of my accounts to really grow it consistently. So let's get to the juicy part and show you guys how and when to open up these call credit spreads and put credit spreads and make them into iron condors, so you too can do this yourself and make this into a passive income stream. I'm walking you guys through a very simple 3-step process to help you identify and find these high value trades, right? These high probability, high value trades where you can make 61% or even more on some of these trades. One is that you guys have to understand what the market trend is. We got to understand if things are going in an uptrend, downtrend, or if it's consolidating going sideways. What we want to do here is that we really want to be able to take advantage of the trend and trade the trend. Right? If it goes up, you want to make sure that we go up. If it goes down, we want to make sure that we go down. But how do we do that? Number 2, you got to identify areas of interest or value. Right? Areas where a lot of people will be looking at it, where it will potentially reverse or continue up. these are the areas that you want to trade at. And then lastly, we got to look at our criteria of entry, which are basically clues that the market is going to either continue to go up, reverse, or continue to consolidate. Right? We want to make sure that we only enter once we get a very good understanding of what the market will do next. And this is what these criteria will allow us to take advantage and enter these high value trades. And so again, on this channel, I like to use my real life trades to demonstrate these principles. So we're going to head over to the charts, how you guys can apply these 3 very simple steps to sell these call credit spreads and put credit spreads. This is a daily chart up till 8/31, the day of expiry. So this is what I would recommend everyone do when you guys are trading credit spreads, 30 to 45 DTEs or even longer, is to really just take a step back and take a look at the daily or even the monthly charts to understand what the trend is. And so when we start here, what you can obviously tell is that the market is in an uptrend. It goes from a low to a high to maybe another low to another high to a low to another high. Because this is an uptrend, what we're trying to determine here is if the trend will continue to go up or will it break down and form a low. But in this case, it's probably very likely that it's going to be a higher low if it were ever to break down. Even though the current trend is up, we can't guess if the trend will continue to be up or down until the market tells us. What we're looking at is to understand what area of value, the second point, would help us determine if the market will continue to go up or down. And for me, that area of value will come around at the previous support. And the support can be found whenever there are places where the market tests it. It'll be around this 45.30 level where my cursor is. What I want to do is I want to see a very convincing break of structure, 45.30 level, in order for me to enter on a bear side trade, which is a call credit spread. If it were to ever bounce up off of that level, then I will want to enter a put spread and trade in the bullish direction. What we're looking for is either a break of this or a bounce off of that, right? So we found number 2 and number 3 in this case, where this level right here is the area of value. And the criteria of entry is either a break of this level or a bounce off of this level. On A2 is when I decided to enter on my call credit spread at 46.10, 46.15, right? Because you can see if you were to zoom in here, very convincingly broke that and closed below. And so at the end of the day, I decided to enter on this call credit spread. Why 46.10, 46.15? Because the previous high of 46.07. And so basically I just did that. Your stop loss, I would just put it as approximately 1 ATR above that, which would be around 46.30, right? And then if it ever broke past 46.30, you would either get out the trade at a loss, maybe probably around $100, so you'll never hit your max loss anyways. As the market continues to go down, basically you're safe on this trade because you are now in this downtrend. Now the next thing that you guys got to kind of look at and understand is when is it going to bounce up? So as I continue to break down, I'm looking. And then so the next area of value that I'm really looking at is probably around 43.90, right around here. However, around here, you can see the market continues to go down, so I'm not interested. The level I'm looking at is maybe right around here, 46.30, because this is the previous support as well. And so right around 43.60, you can see there's a green candlestick here. That's not enough of a signal to enter this trade, because as you can see here or here or even here or even here, right, the market can fake you out the next day, become a red candlestick. So I need the market to give me one more day of strong green for it to continue that uptrend. And so on 8/21, that's where the next candlestick comes in. Again, my criteria of entry has been fulfilled because the market has opened up higher and closed higher. So on 8/21, I decided to sell that 43.50, 43.45, right below the previous day. In this case, probably half an ATR of 43.25, right around here. If it ever broke that, we're out of this trade anyways, because the market probably didn't form the consecutive high that I'm looking for is breaking down. And because it could fulfill my criteria of entry, it went up, never really tested it. And on 8/31, right around here, out of the money on both sides. So we were never really tested. We ended up right in between. And you can see the beauty of this is because by waiting for the market to trend down, I'm really taking advantage of the market movements, being able to use technical analysis to my benefit and be really able to maximize my profit by taking advantage of market structure and market momentum. But in order to understand and find these setups, it'll take time and practice. But I promise you, if you guys keep practicing, keep looking for these signals, you too can sell credit spreads or even buy options, find these high value trades and make 61% or even more. If you guys want to see how you can apply the same 3-step process and make even more money day trading 0DTE credit spreads, make sure you guys check out this video linked in the end screen right here. If you guys like content like this, make sure you guys like and subscribe to this channel. If you guys have any questions or comments, make sure you guys leave it down in the comment section below. Until next time, stay safe in the market. Peace.